Good morning, everybody. I am Stephen Engle, and of course, this is Amy Lowe, who probably needs no introduction in this room. 29 years at UBS.
Yes.
21 years at Bloomberg. We should have a lot to talk about today.
I'm sure.
Obviously.
Thanks so much for having me here.
Well, thank you for having us. All right, being here. So I've been told that you love, among many things, three main things. You love your dogs.
Yes.
You
I
love
have 6 dogs at home.
You love golf, and you love wealth management. We're going to talk about one of those today, obviously. 29 years experience. It's been a bit of a rough year for the Chinese, or last 3 years or so for the Chinese economy, obviously. There has been some wealth creation, but probably some wealth deterioration as well, as you really target those ultra-high net worth individuals. What is your biggest piece of advice now in a changing geopolitical landscape, as well as a lower growth environment in China for when you recruit that family money and the high net worth individuals?
Perhaps to also echo what Eddie said earlier this morning, diversification is the key. Because one thing for sure is volatility is definitely here to stay. And so we've been also advising the client really doing proper asset allocation. But what we've been observing down on the ground, talking to the client, because we just hosted the Asia Investor Conference with 3,300 participants and 300 corporate coming to Hong Kong for the conference. And I can sense that the mood and the sentiment changed a little bit.
To what?
Relatively more positive on China and Hong Kong, because last 3 years have been tough. And we got also more questions on investment in China and Hong Kong. And as a matter of fact, for our house view, we also put China as one of the preferred market, because given the valuation and also the supportive measure from the government and also some of the relaxation from the regulator, that help. And so if you look at Hong Kong, also rebounded. So obviously the question is that sustainable?
That is the next question, because there has been a little bit of policy fatigue as well. The markets did rally since those February and January lows. But again, it's also kind of plateaued a little bit. At least the equity markets have. So what more would you like to see for confidence-building measures, either from Beijing or other authorities?
The continuous kind of supportive measure that would be helpful. And obviously, what we have seen this round is that, for example, with the rally, you have also some of the long fund coming in. And talking to some of the institutional clients during the conference, we have seen that kind of interest. And that sort of interest and fund flow is definitely also necessary. But for them to come in, the supportive measure, the sentiment need to improve. I think that helps. But back to your earlier question, obviously still diversification. I think what we have seen, other than interest relatively turning more positive to equity and stay invested, the other thing is also fixed income. With the market volatility, the investor also turn to fixed income, locking some of the compelling yield. Actually, that also echoed very well with the Global Family Office report we have just published. We interviewed 300 plus global family offices and 1/3 in Asia on what are they doing now and also investing. Actually, 25% of the assets from these global family offices, and especially from the Asian, also said they will be investing, they are putting 25% of their asset into fixed income versus 15% of last year. And another asset class that's also getting very popular, and Eddie also talked about earlier, is alternative.
Which alternatives?
Private equity and also hedge fund. For example, our hedge fund sales increased by 40% year on year. And again, if I may refer to the GFO report, the Global Family Office report, 74% of the global family offices were saying they are investing in the alternative, and they will further increase their allocation into the alternative. And another interesting asset class we've been seeing is gold. Really a lot of interest from the family offices in gold, as well as physical gold.
That's part of the safe haven hedge.
Yeah, the given the geopolitical kind of situation. So some of the family offices also have been diversifying into gold. Actually, what we've been seeing is not just the last few years, because for some of the top family offices, that has been an asset class for quite some time, but it has been picked up quite more widely and broadly by the other clients as well in the region. So that's what we've been observing.
What would you observe as far as their risk appetite right now? Because I guess you could safely say that a lot of these high net worth individuals in China over the previous years before this sort of correction over the last 3 years or so have been more risk. Their appetite for risk was much higher than the norm, right? So they would go into less than investment grade bonds from property developers, junk bonds. They would, borrow on margin quite higher than most in equities. They've had to pare back some of that risk, haven't they?
Yeah, certainly. I think they learned the lesson well, and so especially given last few years, what happened with the property market and some of the high-yield bonds. So instead of being, in general, in the past so many years, they've been quite home biased. They're really looking at global diversification, both in terms of jurisdiction as well as asset classes. But obviously, Asian clients are also very versatile.
Yeah.
So once the opportunity comes, then they will also look at, but all along we've been saying is, core and satellite. You still have to have the core, proper asset allocation. And then for satellite, then you can venture into some of the themes or opportunistic idea that you can capture the market flow.
So those trends will be to where? I know your co-head in Singapore is looking at India, looking at Australia. Obviously, the Fed and the yields there have attracted lots of investment, but the Fed might not be, tight for so long. It's higher and for longer, but when it turns, what could be the returns back to this part of the world?
Yeah, I think that's the reason why the asset allocation is so important and really keep versatile and be able to capture some of this opportunity. And to your earlier point, that's also what UBS has been doing, especially with the integration now. It's very complementary because historically, UBS is very, very strong in the Greater China region. So with the acquisition, actually it adds into a book the India, the Australia, and also potentially Thailand and some other Southeast Asian country. So I think for us, Hong Kong and Singapore still are our core hubs in Asia. And then our strategy is how we're going to also expand and further grow our established market. That includes Taiwan domestic, because we are the biggest foreign bank in Taiwan domestic, Australia, India, and also APAC Switzerland, because we have over 100 plus bankers from Switzerland covering Asia, and 60 of them speak Mandarin. So that's the kind of franchise we have. And then long term, how are we going to grow China and India? Because these are the two biggest growth market in the region as well.
Speaking of the family offices, what still needs to be done, if we talk about this home market here, to attract those family offices that might have left, or trying to get them to come here? Because a lot of the wealth, obviously, with this generational transition that we're expecting, because a lot of, I think 2/3 of the billionaires in China are entrepreneurs. They're first-time money. They need to pass it on. And over the next decade or so, we're going to see a lot of wealth transition to the next generation. So what's the opportunity at hand for Hong Kong?
Oh, there are a lot of opportunity. Talking about the wealth transfer, you are talking about 2.5 trillion asset that will be transferred to the next gen by 2030, according to the Wealth X report. So there's a lot of potential for private bank like us to provide that kind of services. So obviously, I think China remains to be one of the top market, because we conducted the survey to all the members bank, because as a chair of the Hong Kong Private Wealth Management Association, basically all the executive committee and the members bank have been telling us China remains to be the biggest growth market. I think what the government has been doing with the capital investment entrance scheme that Eddie talked about earlier helps, because right now we already receive 150 applications, and we also got a lot of inquiry. And actually, my 30-year plus experience, I've been also witnessing a lot of family offices set up in Hong Kong, multi-thousand, okay, a few thousand. But how are we going to also even attract more to come in? And that's where, again, Eddie referred to this morning about the multi-corridor, the Middle East corridor, the ASEAN corridor, and in addition to the China market. Okay, so I think that's also the different scheme, tax scheme will be helpful because one of the strengths of Hong Kong is the low, simple tax scheme, and also the very well-established regulatory system to protect the investor, as well as the connector, being a super connector, the connectivity that Hong Kong can bring through all these different corridors. I think that will be very helpful.
Did you hear anything from the HKMA, Eddie, this morning on what kind of changes you'd like to see and expansion of the Wealth Connect?
Yes, and actually that's also something we've been advocating and proposing to the government on behalf of the Hong Kong Private Wealth Management Association. Because right now, even with they raised the quota to 3 million renminbi, that's not really the segment for the private bank yet, because especially given the PI regime. So obviously the quota is an area that we need to further increase, as well as the product offering. Because I think one of the strengths of Hong Kong is also the advisory capability, plus also the kind of breadth and depth of the product offering and the platform here. So how we can leverage on those. And the other channel, which we also discussed, because right now is more execution only. So how we can leverage on Hong Kong's strength being on advisory. So we've been also exploring potential advisory licensing within the Great Bay Area. So that's also something the industry has been looking into.
But that should be something that Beijing would be open to. They want to create this single market, if you want to call it, with still boundaries, obviously, with Hong Kong, of the Greater Bay. So what are you pushing for to get that license
That's
approval?
something we are exploring and also have been discussing with the industry and also with the regulators there.
Tell me how your plans are affected by, obviously, the integration of the two parent banks now. I understand it's pretty much complete and that Asia is going to be your priority. Hong Kong first, then Singapore and Japan. What are your plans?
The integration so far goes on well, and this is unprecedented and historic, despite the fact that this is not the first time I went through the integration with 29 years. Actually, the first one was between Union Bank of Switzerland and Swiss Bank Corporation, the two biggest banks in Switzerland. And I was from SBC. So it goes on well, and actually we just completed the parent bank merger on May 31st. And that allowed us to really deliver the service to our client with a fully integrated team from UBS and CS. And that definitely helps. And then, as you said, then we will have the system migration and the client migration. Hong Kong will go first, followed by Singapore, and then the rest of the world. And so we are very excited, because this is really the power of the two, very complementary, both in terms of the platform, the offering, and the expertise there.
Obviously, in the banking community here in Hong Kong, there's been a bit of a confidence crisis. Almost every bank has laid off some employees, including UBS, I believe about 70. But you have one of the biggest portfolio of wealth management advisors, more than 1,000. You also have, more than 600 billion US dollars in assets under management. When do you see the confidence returning to the banking sector here, where it can start growing again and adding headcount?
We continue to invest in Hong Kong for sure. I think the fact that, we signed a lease for 10 years, actually it's 10 plus 1, to move to West Kowloon. It's a major commitment. If we don't see the potential in the growth, we won't commit such a long-term lease for Hong Kong, in Hong Kong. I think the reason why we moved there, on one hand, because right now we have for almost 4,000 people in 5 different places. We want to put everybody under one roof and have our new home there. And on the other hand is that we are also very positive on the Great Bay Area. So on West Kowloon, right about the high-speed train station, 3 minutes, I'm down on the high-speed train and connect to the rest of the world, west of China. So I think that's a major kind of commitment, and that speaks for itself, the kind of potential we see out here. And we are still looking at hiring selectively, and also definitely, this is a growth region, as announced by Sergio, US and also China and also Asia as a growth region for UBS.
So it's a beautiful building designed by Zaha Hadid. So obviously a pioneer, a female pioneer, and that's something that's very close to your heart. Getting more women onto boards in Hong Kong. Obviously, there are lots of women in extremely important positions, including my next guest later in the morning, and that's going to be Bonnie Chan of the Hong Kong Stock Exchange. But how important is it to get more females in Hong Kong on boards in charge of wealth? My family, my wife's in charge of our wealth, and it works.
Something I'm very proud for Hong Kong is that as the founder of the Women CEO in Finance, we have over 60 women CEO in finance. And these are talking about some of the big banks like HSBC, Citi, Standard Chartered, UBS, and ICBC, even some of the Chinese banks, and SFC, and Hong Kong Stock Exchange. I know you've been talking to Bonnie, but I totally agree, we haven't done a good job yet on the board's representation. The women representation in the board in Hong Kong is 18%, despite we have an increase from 17 to 18.5. So that's definitely the efficacy. We are now pulling the resources together to change, to lobby, both on the policy and also how we make it easier for women to excel, be it in the finance or in any of the career they chose for. But one thing though, if you look at the World Bank report, actually Hong Kong scored quite well, 65 out of 100. And that kind of score basically is to measure the supportive framework for example, like Hong Kong as a city, to women in terms of in the area of protection or pension. So it's not that bad, and that's above the average, global average of, I was told, 40%.
We have 20 seconds left. It's not enough time for this last question. Since we're taking your advice on where to invest, what's your best investment you've ever made? And it doesn't have to be a financial, product.
Alternative. Personally, I also put quite a lot of 30-40% of my own small account into alternative, the private equity fund.
Okay, there you go. Right, like the Shinkansen train, right on time. Amy Lo, thanks so much for your time.
Thank you so much.